Hey, it's Randy at Funeral Funds of America. In this video, I'm going to share with you the actual pricing for $20,000 worth of burial, cremation, final expense, life insurance, or funeral funds for a 69-year-old male. Now, first thing I recommend is just visit our website at funeralfunds.com. We've got these free quoters on just about every page. And if you just select the state that you live in, we are licensed in all 50 states, by the way, select the coverage amount, put your birthday in there, the rest of the info, click Get Quotes Now. It will take you to a page that's going to show you the best insurance companies that are going to offer the lowest pricing based off your age, gender, and the state that you live in. Take full advantage of it. It's a terrific opportunity to price shop all the insurance companies in one place. You can also call us at 888-862-9456. One of our licensed agents can help you over the phone. So one thing we always recommend to our 69-year-old male clients is just to determine if $20,000 is going to be an adequate amount of coverage for your final expense needs. Now, typically that final expense need would be either a cremation or a burial. There's two options with cremation. You can just come home in a cardboard box or an urn, and that's typically going to cost between $1,000 to $2,000. Or if you're going to have some sort of a ceremony or remembrance of life or celebration of life ceremony in addition to the cremation, probably $3,500 to $4,500, depending on what part of the country you live in. Now, as far as how much insurance coverage you would need or require, we would typically recommend for that cremation where you come home in a cardboard box or an urn, most of the time we're helping clients with between $5,000 to $7,000. Now, you might be going, well, hold on, Randy, you said the cremation's $2,000 and now you're telling me $5,000 coverage. What's going on? Well, the thing is our 69-year-old male probably wants to make it to 79, maybe even a little bit longer, right? So we know that the prices of things go up over time due to inflation. So what we're actually doing is getting enough insurance to inflation-proof the plan for the years to come. And we're doing so by locking in your current lowest rates. Your rates will never be lower than they are today at your current age. And what that does is that protects, your family members or whoever the beneficiaries would be, protects them financially in the long run from inflation so that you'll have enough insurance when you do pass away. But also in the short term, God forbid you die sooner than anybody thought, there's a little extra money to take care of some other expenses that maybe, you may have been able to pay off if you lived in it long enough, but you just died sooner than anybody thought. That could be medical bills, that could be credit card bills, things like that. So yeah, when we're looking at that extra coverage, we're inflation proofing the plan for the long term and providing some extra money in the short term. Just God forbid you don't live as long as you thought. Now for the cremation and the ceremony, we would generally help people with between like $7,000 to $10,000. Again, inflation proofing it for the long term, providing extra coverage in the short term just for unexpected expenses. And it typically works terrific in most cases for people. If you want more coverage or less coverage, we can certainly help you out with that as well. Now, the average cost of a burial in the United States is right around $10,000. It's pretty hard to imagine that if you walked into pretty much any funeral home in the United States with a $10,000 check, they would turn you away, kick you out the door, and send you down to one of their competitors, or I'm sure they would take that check. But just understand, that's going to be a very simple, meager, slimmed down type of fare. I mean, $10,000 is kind of what it costs today. Not going to be anything fancy. So, if you're on a fixed or limited income, that's all you can afford. Oh my gosh, go ahead and do that, because we can always come back and add more coverage later, but that takes care of your most immediate need. But if you want to inflation-proof the plan, we should be looking at more coverage, like maybe somewhere between $10,000 to $15,000, maybe up to $20,000 as well. And it might be $13,000 for one person and $17,000 for another. But we can help you kind of determine based on your location and kind of what your needs, wants, needs, and desires are for that day. So. We'll also get sometimes somebody to say, hey, I want to not only pay for my final expenses, make sure that's taken care of, but I want to leave money behind for the kids. And they'll go like, what's $50,000 going to be? And we get them the price, and it's a little more expensive because they're age 69 and they're probably on Social Security or disability or some sort of fixed income. And sometimes that's just a little more expensive than they can really afford. So occasionally people will go, well, nope, not going to do that. If I can't afford to do everything, I'm not going to do anything at all. We kind of have to have a little counseling session with them and let them know that they originally came in and wanted their family members not to have to pay for the final expenses, but it would be nice to leave some extra money behind. So nice to do, but not necessary. So we know we're all going to die at some point. So we know the insurance for the final expenses is necessary. So what we recommend is they take care of that first, because if they don't take care of that, their family members or children are going to have to pay those expenses for them on their own. Chances are they're going to have to put it on credit cards, paying 26% interest. It's going to take them years and years and years to pay off. So if you get that taken care of, you protected the kids, the family, whoever that is. And then what you can do is we can help you come back at a later time and just help with a separate policy just to go to the kids if that's what you want to do. That just works terrific for people that are kind of just not where they want to be financially. Now, if money's kind of not an issue for you, we can all wrap it together in one plan. But just keep in mind, splitting it up is a terrific option for most folks. Now, one thing we always recommend is getting first day coverage or benefits. And we do not recommend those 2-year waiting period plans at all. We'll talk about that in a minute, but we don't recommend those at all. But what that first day coverage means is that hypothetically, if your plan were issued and approved today and you died tomorrow, the insurance company would have to write that check for $20,000 or $15,000 or $25,000, whatever the coverage amount is. That's going to be the best coverage. It's also going to have the lowest pricing. But sometimes people will say, well, Randy, you're right. I do want that first day coverage, but I'm not in the best of health. And I know those first day coverage plans ask health questions, and I'm a little bit worried that I won't qualify. And we always say, hey, that's our problem. That's not your problem, at least from an insurance standpoint. And reason we say that is that's why we work with so many different insurance companies. They all ask different health questions. They all have different underwriting requirements. And right now, around 90-95% of the time, we're able to get people first day coverage or benefits. So we're terrific at what we do. Really, the only reason we wouldn't be able to get that first day coverage or benefits is if you waited too long and maybe you had like a terminal illness and you're going to die in the next 12 months, or you had dementia or dialysis, or you're in a hospital or in a nursing home. If that were the case, something like that, we'd typically refer you out to a different insurance company. What also seems to happen on a weekly basis is somebody will call us up and say, hey, we had a family member pass away this last week and they didn't have insurance and we don't have any money and their body's down at the funeral home and the funeral home director is not going to do anything till we get a check in his hands. So we need to get this insurance really quick so we can get money in our hands to pay the funeral home director. We have to let people know that, hey, there's no insurance company out there in the United States that is going to offer a policy on somebody who's already dead. You actually have to be alive to qualify for this insurance. And it's really sad that they lost a loved one. It's doubly sad that their loved one didn't care enough about them to get this insurance in place beforehand. They knew they were going to die someday. They'd probably looked at this insurance before, just didn't do anything about it. And then they just put it off. And then just one day they just went and died. And now their family members have to pay for this. And, typically they're going to have to put it on a credit card, pay 26% interest. And it's just, they're going to end up paying on this for years and years and years. And what a terrible legacy to leave behind. You could have done everything else right in life, and then you just sock the people that you care most about in this world, you just sock them with this huge bill that they're going to have to pay for years and years and years. So don't do that. Don't leave that legacy. This insurance is affordable. We can always help you start small, help you add more coverage later. One thing we don't recommend is those plans out there with 2-year waiting periods. Now, Colonial Penn, they're fairly well-known company out there. You probably see them advertise that $9.95 plan all the time on TV. It seems like every 7 minutes there's a Colonial Penn commercial. But you may not know this, but that $9.95 plan from Colonial Penn is a 2-year waiting period plan. Ouch! Ouch! That hurt, right? Yeah, you should never get a 2-year waiting period plan when you qualify for first day coverage, and we'll kind of explain why. But Colonial Penn's not the only company out there that has 2-year waiting periods. There's a bunch of companies like Mutual of Omaha, their United of Omaha line, AIG, Gerber. Gosh, so many different insurance companies out there that the only thing they offer is 2-year waiting period plans. And there's some of these companies have done an amazing job of convincing the American public that if you're over the age of 50, the only thing you're going to qualify for is a plan with a 2-year waiting period. And nothing could be further from the truth. When we hear that, when we hear people say the only thing you're qualified for is a 2-year waiting period, we go, don't believe such nonsense. We help people with first day coverage all day long. Now our 69-year-old male probably just got done watching one of those Colonial Penn TV commercials and probably thinking, oh my gosh, I'm going to get so much coverage because I'm only 69 and that commercial was so slickly produced. And for $9.95, I'm probably going to get, 20,000, 30,000, 40,000. I bet I can even get $50,000. So excited. And then they get on the phone with a Colonial Penn agent, or they get online like we're doing for you on their website, and they see that 1 unit of coverage, which is $9.95, is only going to buy $724 worth of coverage. Now, $724 worth of coverage is not even enough to pay for a cremation, just a simple cremation where you come home in a cardboard box or an urn in any part of the country that we know of. And even if it did pay, it's got a 2-year waiting period. So it's not going to pay for 2 years if you die. It's not going to pay in the next 2 years if you die of any health or medical reason. So why would you ever get a plan that's not going to pay for your most basic needs and it's not going to kick in for 2 years? It makes no sense. It makes no sense. Now, there's a lot of people, at least I've heard, right, that would say that, some of these companies that offer these low teaser rates, kind of they tease you with these low rates just to get your information so they can get you in their marketing funnel, and then they can reach out to you. And once they get you on the phone, they're happy to show you how measly, how meager, how minimal the coverage you're going to get for that low teaser rate. And then what they do is they then upsell you to more expensive coverage that's much more profitable to them. Now, we would never say Colonial Penn would do anything like that, but some people seem convinced of such things with companies that offer those low teaser rates. I guess the only thing you can do is determine for yourself based off the fact that for $9.95, you're going to get $724 worth of coverage. But let's do this. We want to try to find out what $20,000 worth of coverage is. Let's look at Colonial Penn. The challenge is they max out at 15 units. So you are not, just, I've done the basic math here, you're not going to get $20,000. In fact, they max out for a 69-year-old male, $10,816. You're going to pay $150 roughly. So let's see what first day coverage would be and see how much money we can save you. It's going to be substantial. So here we go. $20,000 male, age 69 right there. Get quote. We're going to come back and check this out again. Roughly $10,000 for $150. So take a look. I want to show you this again, just so you know we're showing the $20,000. It's going to be roughly $128, $129. So would you rather have $20,000 for $128, or would you rather have $10,860 for $150, right? So basically you're overpaying around 20, just I'm close math here, $20 a month more, and you're getting about $9,000 less, right? So if we just do the math on that, because with Colonial Penn, you're going to overpay every single month for the rest of your life on that policy. And you're going to get socked with that 2-year waiting period plan. So if it's $20 a month times 12 months, you're going to overpay $240 a year. And if our 69-year-old male lives to age 79, you're going to overpay roughly $2,400. So why would you ever transfer your $2,400 worth of your wealth over to an insurance company just because you kind of weren't being a smart consumer? So you really do need to be a smart consumer, and it's okay if you're not. We can help you be a smart consumer and help you get qualified for the lowest price plans. That just keeps money in your bank account versus putting that money in the insurance company's bank account. Let's take a look at some other companies here. Like here's Lumico. Level coverage, but they're like around $12 more a month. And you go, it's only $12 a month, not the big deal. Well, $12 times 12 months is $144. Our 69-year-old male makes it to 79. You've overpaid for 10 years. That's roughly $1,440. So answer me this. If you were walking down the street on the sidewalk and you had $1,440 in your wallet, would you just pull that out and throw it on the street and keep walking and let other people pick that money up and keep it? No, you wouldn't. Why would you do that with an insurance company? So don't overpay an insurance company. You lock in your savings at the very front, and we can help you. We can help you get these lower rates and get qualified. So let's take a look at maybe one other. Oh, here we go. like Lincoln Heritage. They're a fine company, I guess, but holy guacamole. Look at that pricing, $165. It is level coverage. But oof, what about that pricing? Well, Lincoln Heritage has got a deal where when you pass away, they will supposedly call 2 or 3 different funeral homes to get the lowest pricing, maybe do a couple other things, but they don't do that for free. They charge extra for that. And you're going to end up overpaying on that policy for the rest of your life. So this is roughly like 166. We'll round that up. 166 versus 129. So if you go with Lincoln Heritage, you're going to overpay roughly $37 a month, just roundabout. So let's do the math on that. $37 a month times 12 months, that's right around $444 a year you'll overpay. And if our 69-year-old male lives to age 79, you have overpaid roughly around $4,440 on a $20,000 policy. So you got to ask yourself, is it worth paying an insurance company an extra $4,444 roughly to make 2 or 3 phone calls and do a couple other things that may only take an hour or so to do? A lot of people would say that's a pretty good payday for the insurance company on an hourly basis. So yeah, like $4,440 per hour, phew. Yeah, I'd like to get that. But yeah, just be cautious. We don't recommend transferring your wealth to an insurance company unnecessarily. We recommend you keep that money in your bank account or spend it on yourself while you're alive. Spend it on your family. Enjoy those memories rather than transfer that over to an insurance company. So what we recommend is you let us help you get the lowest pricing. And then what we also offer free of charge, by the way, is a funeral and estate planning guide. And you can download that off our website and then print it out. And once it's printed out, you just fill it out. You write down who gets what and what goes where and what you want done after you're gone. And that way, your family members, when you're done with that, you just keep it right with your insurance policy. And that way your family members, when you pass away, they'll go to that one place and they'll have both documents there. And they'll know that you not only protected them financially with the insurance, but you also protected them emotionally with the funeral and estate planning guide. And all they need to do is open up that funeral and estate planning guide and open it up and just start reading what you wrote down. And all they'll have to do is execute your wishes. And they'll know that they're doing everything that you wanted done in exactly the order that you did it, and that you've funded that with the insurance policy. And they'll know that you not only loved and protected them in life, but you also loved and protected them that one last time in death, exactly when they would need you the most, but you wouldn't be there, right? But you left this behind for them. What a wonderful legacy to leave behind. So if you want to leave a legacy like that, just give us a call at funeralfunds.com, and we can help you out with that. We've got a special quote for our YouTube visitors, funeralfunds.com/YouTube, where you can see the best companies with the best rates. We've got special discounts for you. Take full advantage of that. That's a great way to be a smart consumer. And then you can also call us at 888-862-9456. One of our licensed agents can help you out with this. But if you've got an existing policy and you want us to price shop it to see if we can save you money, or you want to add coverage to that, we can help you out with that. If you're looking for a brand new policy or just have some questions, or need some things answered to be certain what's best for you, we can help you out with that. But we will look forward to that day when we can help you get the most amount of coverage for the least amount of money. We will be blessed to help you with this at some point in the future. Until that day comes, you stay safe, you take care. You have a nice day. Bye-bye.